All right. So, picking up on my video, watch list video, and knowing I'm going through my big scan now, but I'm noticing something very interesting on the scan. I think I'm going to break into the video here and do a little education, a little discussion of reversal candles and how important those are in the whole, system of the HPS method. The reversal candles, I consider those an indicator in themselves, but they really play a big part on charts when you look at a chart. When you can look back at a chart and look at the history on the daily chart and you see these areas that are moving, they typically reverse on one of 5 different candles. All right, and that's kind of interesting. And there's better candles than other candles. So this is something that I love to watch, and I don't pay enough attention on. So I've been working here with the video off, working on a couple new scans here I want to share with you because it's very important. Because just look here, I'm going through some of my scans here, and let's see here. I want to actually international paper. All right, just anything. This is just going into random order. I don't even know, but this is the part I'm up to, and I'm looking at each stock. I'm looking for divergences. I'm looking for whatever trend lines and patterns. But every so often I'll see something like this. A big reversal candle. And a big reversal candle, one of the best ones is these big kind of hammers where the body leaves a very long tail or shadow, and we close near the highs of the day. And the other requirements are that it has to take out the previous lows. Now, you could go out as far as you want. You could go out to a 40-day low. You could go out to a 20-day low. I want to do some scans, and you can just adjust that, low. I want to put down a 20 because I could start weeding through those. And, it'll give me everything from a 20 on. So, it's not just going to give me a 20-day low. It's going to give me anything bigger than a 20-day low. All right, back here with you. Sorry about that phone call. So, again, the importance of the candlesticks. I've been working on the candlestick scans here to give those to you. And I want to probably, I'm using the TC2000 charting program right now, so that they have a little formula you put together to identify your scans and stuff. And what we're going to be looking for going forward, and again, especially as a newer trader, I always stress taking what we call the high probability setups. And the high probability setups when we're trading during the day, taking our scalps and either anything fast moving, be the futures or options or regular stocks, we do look for divergences. But the other thing I like to look for on the bigger the bigger picture is these candlesticks, and it's just an easy way of getting an entry. So it requires a little patience and just a couple things lining up. A divergence and a candle is one of the best setups. It is the best setup. It's that candle represents that lower low, and then it reverses and it keeps that higher low in the stochastics. It's very easy to see, and from that point on, a longer term position should be taken in whatever you're looking at, and you should have a little bit more understanding of the potential direction and how far this could go. So you should add that into your formula and decide how you're going to take those options, or how you want to get into the stock. But this would be the perfect level. Now again, we have to wait for the next setup. Now, as I was going through these scans here, I just, I always look back and I said, well, every chart keeps these trend lines on for me. It was kind of a double bottom, very steep divergence here. Remember the stochastic lifting up as the price came down to meet the previous stochastic. There's a very steep line here, and that that's divergent from this one. This was pretty much a double bottom right here. So it's just, and then from that point on, we got a nice move. But here we have a couple candlesticks that we might be interested in. And again, one of the things I like to see is an oversold stochastic. In this case, it could be either the 9.3 or the 14.3. Have a candle, and again, my criteria for a good candle is that tail, the tail portion of it, the skinny portion, the shadow, not the body, the thick portion. Tail should be twice as big as the body. So this doesn't really qualify, but because the tail is really, it is a pretty decent tail, it would catch my eyes and, and say, all right, the 200 period moving average is there also. It's oversold. This is probably a good level. If it was a divergence, it'd probably even be a better level. But anyway, that's, just showing you examples. So we could go back, and you should do that. Just go back and look at all the setups that you have on your list and see where the major moves are. I was going through these before, so I'm just going to, and plan. I actually wrote down plan here on my sheet because actually it's a really nice strong setup. This actually has a pretty decent candle too, even though it's not a 20-day low or 40-day low candle. Seeing such a big reversal candle and closing back at the highs is really good, and this is actually just a nice setup overall going forward. A lot of these markets, a lot of these stocks have already ran and are trading up near the highs, but there is a lot of pullbacks here. We're starting to identify some of these. I'm just going through a couple of these I did notice before. It's a nice Ingersoll Rand. We talked about the last couple of days. It was actually a great divergence, one of the best divergence of the last 2 weeks, and as you can see, it ran with that divergence. I did not take part in this one, and that's, again, sometimes just having too many positions, but this was really a qualified divergence. This was kind of an engulfing pattern, which is also another reversal candle. Here's a divergence over here with a nice reversal candle. That candle qualifies. The tail is twice as big as the bottom, and the bottom takes out the previous 20 to 40 days. The stochastics are high above the 20 line, and from that point on, you have a nice swing trade. Very important. Again, you have to recognize this. You have to stay true to this. This is the best way of trading. There's all kinds of methods and stuff, but for a longer term swing trade, these are the best entries. The divergence, reversal candle, anything else you want to add to that, it usually works out pretty good. So this was a beautiful divergence back here. Didn't have a reversal candle, but this, again, the divergence so steep represents a really nice one. Then you had a big candle and a couple days of consolidation, but overall you're getting that nice move up here. So again, I go through these. You had a nice 1, 2, 3 kind of channel here, wedge pattern, 200 EMA channel line bounce. That's an HPS setup. So it's a type of trade where we have an established trend line cutting through the 200 period moving average. The price coming to the 200, breaks through it, but comes down to the lower trend line and bounces, holds on to that, and then off to the races. But we were in this one also, waste management, one of my favorites. And look at that thing continue. I mean, this is another one that you probably should just be in and holding. If you think this market continues to move higher, some stocks are just going to continue to be there. Costco, excellent rebound. It's holding the 20 period moving average. I mean, you could easily see that Costco is a good stock. And look at this divergence here. You have a nice little pullback. We actually traded this one right here. It was a steep higher low versus this low and this low. It's a double bottom, but a much higher low on the stochastic indicator here. You could see you're really taking a look at right here. This area right here. You could see the steepness here versus the price level from this level straight across is pretty flat. And then from that divergence, once you get that kick up, you get the momentum started. We talk a lot about momentum also. PEG here might be coming down, setting up something. And again, this is something that I have to continue to do. Just search these out, But just know that going forward, we're going to focus on a lot of these reversal candles. And so I have a couple scans. And feel free, if you are a member and you're using TC2000, just hit me up in the chat room. I'll give you my code for these. Let me see if I have one here. Let's see here. So I pull down this here. How am I going to do this? All right, so this is my piercing line. All right. I have what's called a 20-day, 20-bar low reversal hammer. And I'll scan all the stocks here. And so they'll give me some setups here. And I didn't filter it to certain type of stocks or certain sector because it's a pretty decent scan. It gives me it doesn't give me a lot of junk. It gives me a pure setup because it's pretty good. And if there's a divergence in there, that's even better. Some of these you won't know. I don't know CDMO. Some of these, most of these, but they fall into that category where we're actually taking out the lows, close on the highs, have that big candle. In some cases, like I said, there will be divergence also. There's one here. Fossil is interesting. Also want to pay attention to the volume on this. Whenever we have a reversal candle, you also would like to see that volume. And there's volume. It did come into this. It's a little bit better volume. It'll be interesting. I'm not a big fan of fossil, so I probably would not trade it, but it did, just pointing that out. And then Parker Drilling here is a pretty decent candle. And look at the volume on this. So capitulation in some way there. It's a cheap stock though, $12. So I have all these. Again, I have the scripts on these reversal candles. Hit me up in the chat room or send me an email on Day Trading Radio. I just did a bullish engulfing scan here, and I'm just going to curious because again we have 5 different candles. I should go over those right now with you. Hold on. All right, this is part of the HPS high probability course, School of Stock. If you go to theschoolofstock.com or the link on the site, you should be able to get to the courses here. And part of the course is it breaks down all the indicators. And like I said, candles are an indicator for me. So these are the important candles and how to identify them. All right, shooting star, hammer. Shooting star and a hammer are basically the opposite. One's a bottoming pattern, one's a topping pattern. Gives you that big long candle. Engulfing patterns, very similar. The important part is we take out the lows and we close above the highs, previous day's highs. In this case, you have bullish engulfing. You engulf the previous body there. You see that red body? The body of the current engulfing candle has to be bigger or lower than the low of the body and higher than the low of the high of the body of the previous day. Now, it's a little bit different from what we call an outside day, which we could take the lows and the highs and we'll just apply that same rule. Lower than, in this case, it works as both of them. And the same thing as a bearish engulfing pattern. Piercing patterns, the same thing. The important thing is the move down. Now, in this case, technically, you like to get that gap down or a fast move down. So that our body or our low is lower than the previous day's close and body, and we push back up until we get past 50% of the previous day's body and close above that 50% mark. That represents a piercing. What that says is we're piercing back into the previous candle. And the same thing, dark cloud cover. Same thing, kind of gap up, even take out the highs, pierce back below the 50% into the previous candle. All right. So those are the main ones. That's the ones we're going to talk about right now. There's some other ones a little bit more complex, but basically that's what we're looking at, and the combination of all those happening. So I just did this bullish engulfing scan, and I might show you how to fix this. Now, again, you can see this is definitely a bullish engulfing candle because of the candle engulfed the previous candle, but it's not at the lows. It's not a true reversal. So what I'm going to do to that, and again, all you need to do if you after you get something, you want to add your own indicators to it or just kind of tighten it up, you're going to add a condition. So what I'm going to do is I want to just take a basic condition, which I'll take as the price, and the price will be new low. And it could be a 50-day low, 50 bar low. Now, lots of times, don't get confused. It depends on what time frame you're looking at. So that's why you say bar low instead of day. If you're looking on the daily chart, it would be a day low. If you're looking on a 60-minute, then it would be a 60-minute bar low. So it makes a big difference. So again, I usually look at it because the markets have been so bullish. I'm not looking for a tremendous pullback, but I usually start off with a 20-day low. That way I know the stock has pulled back enough, but it could be whatever you want and just test it out. Now I want to say okay, and now I want to scan that. Now I had about 133 items. Now let's see what happens. Now I'm down to only 12 items. 12 or 13 here. So let's see what we got here. So now some of these will be worthless. You know, here's one down here, 23 cents. I didn't change the price. I'll go from high price to low price. Kellogg is showing up as a divergence candle. We took out the lows, closed above the highs. That's quite interesting. It's also starting to look like a divergence too. That's very interesting. Kellogg. KHC, another interesting one. Kraft Heinz, decent engulfing pattern. Volume was there, something to watch. You know, these are the ones that you want to identify. I'd rather see this one in a big hammer, like here, you know, where we close right on the highs. But this is not bad. The volume was there, it reversed. It kind of closed above the previous body's close or high there, that body. Starting to move back up. So that has a lot of potential. It's also a recent channel breakout, and then its first rotation back as a buy, and then we kind of got a second rotation to an oversold level, bounce, and now we have this one. Now we have a reversal candle. It's not an exciting stock. It's $28. It's not my favorite, but definitely worth watching at this point. So any of these could be, potential trades. Cato Corporation, don't know much about that one. We'll just skip over that. AV, and again, JFU, don't know much about that one. And then we get lower in the price, and we kind of don't pay attention to these that are real cheap. So Kellogg and Kraft Heinz both fit in that criteria. So you could make a sorter over here on the on this TC2000, and you could sort by putting columns up here. And then what I could do is I could add a column up here, condition column, and I'll put my different hammers there. So let's go to a 20 bar low hammer, and that's there, and I could add that. So now I could actually sort by that, and if any stock comes up, it would put a check mark there, and I could identify an HPS with a hammer. And I'll probably do that. It'll make it easier for us to scan these going forward. All right. Here's Fastenal. Fastenal, you can actually see a couple decent candles here. Here's a candle, a nice candle. Took out the lows, closed, opened up, closed on the highs, kind of gapped down, closed on the highs, but took out the previous lows. And then we had a follow through up until it got overbought. Very easy to just take your profits off of here. And then you had a kind of a different kind of candle over here, but it came in with a divergence, and from that point on, I think it was an earnings play. But here, another beautiful divergence with another reversal candle. All right, and again, reversal candle. We're talking about that one candlestick as a hammer being twice as big as the body. But also remember, if we close, the body's big, and we close higher, this still is a very bullish candle, especially because the divergence is there. I mean, the key is taking out the previous low, closing on the highs. The bigger the reversal, the better, and the more volume is better. But this is number one here. There we go. The reversal divergence here. And we had a nice little divergence here, and then a run up, and everything works out always. Nice reversal back here, candlestick, almost qualifies, but it's on a trend line, and look at the big move. So all we have to do is wait for a divergence, lower trend line. There was a nice divergence here, and a big move up. Reversal candles, divergences. Let the market come to you. All right, let the market come to you. Don't go chasing things. Don't get overconfident, and sit back, relax. Don't chase this market. Don't have to. Market's not going to give you something every single day. All right, it could. I mean, there's no doubt there's opportunities out there, but the high probability setups, you let them come to you. Let them show up on the chart. Very easy to spot these. Divergence, big reversal candle right here. And the perfect divergence closed on the highs, and from that point on, it was off to the races. We're just going to identify these going forward. Take them, go out a little further, maybe pay up a little bit more, if we go with the options or just the individual stock. But I know a lot of people like the options because, buying 100, 200 shares of a stock to get 2 or 3 points, putting up all that money. Just these are such good setups that the options are the way to go. Berkshire Hathaway, nice candle back here, piercing candle. Oversold. Big reversal candle in LUV, pushed back up, followed through. I think that's about it. I mean, I've went through all these stocks. And again, like I said, did some nice scans for you. We do have a couple of good scans. Missed that one, IR. I admit that. I said we were on top of that 2 weeks ago. That was one of the best setups. Perfect divergence. But if you miss the divergence, you still get to learn from it. You build that confidence. All right, so we've gone through all these. Everything looks good. Let's switch over here for a second. A couple of stocks we're holding going into next week. The VT. Just talked about it yesterday. Came out with news after hours. It's going to announce, to host a investor call and announce results from part 2 of the phase 2 study of the TTP 399, potential first-in-class oral therapy for patients with type 1 diabetes. So that has some news from Monday. It's already moved after hours. You can see this moving up here. Pretty aggressive move up on this. So we're in this, and that's a good thing. That's a good thing. It's always good to be in a stock. Like I said, we picked up a lot of these drug stocks and stuff, waiting for some news to come out. I have the CVM, I have the BV, the Biohaven, BHVN, some other ones, KPTI, of course the Merck now. One more look at the Merck now that we've closed. It didn't get the reversal I wanted to yet. I've just gone out far enough. I like it here off the lower trend line. We'll see how it reacts Monday. Just give us some time, and it's going to be off to the races. So overall, good. We have Veru's earnings out next week, VERU, and after that they're also going to be presenting at the ASCO 2020 conference, ASCO conference. There's going to be a lot of stocks that we're holding, and we're going to be presenting. The EXEL had a great close today, a great run today. We picked up, continued. They're actually going to be presenting, I believe, at the ASCO too. And again, this is one of my favorites, just based on technically the chart and holding this trend line and making its move. I think we're eventually going to break out of this downward channel. Stochastics again still look okay. It looks like I have ways to go. So looking at that one for next week also. Tupperware, TUP. I read up on it. It sure does not look good. They got rid of their dividend, but there's a lot of hate out there. Where is it? TUP. Why isn't it coming up? There it is. But we started to see a little move today. Started to move back up. We're starting to move up over. It's a $6 stock. I'm not 100% on. I think it's dangerous. Just seeing it closed up pretty good. A couple other cheapies here. SENS. That's it. All right, so we got through that. I wanted to do something on the candlesticks because I think that's going to be important going forward. Futures were down about 22 today, 22 and a quarter. The Dow was down. Let me see what the Dow was down. I have that in front of me. But we're going to see what happens over the weekend because that will be, if any more news, any more coronavirus news, definitely would affect us. We closed near the lows and in a pretty decent pattern. You have this nice little downward channel that's working out pretty good. So I want to just extend that so you pick that up on Sunday night and see how that holds up. And we'll probably stay, at one point, break that channel. If there's bad news, of course, we'll flush through it to the bottom side. But if not, again, the same situation: a breakout, retest, follow back up. That's it for this video. I'm going to put another video out there. I'm going to do some more research on some more drug stocks and get the latest bunch out to you. So let me get this out for you. Hope you enjoy the HPS watch list. Hope you're making some money this week with us here at Day Trading Radio. And I'll see everyone Sunday night to Monday morning. Monday morning, of course, live. Sunday night, you never know what's going to happen. If there's any breaking news, I'll be on the air to guide you through it. Have a great evening. Have a great weekend. I'll see you Monday.